Alright, Fanatics, it is time for a trading setups breakdown, time to bring this series back. And I have decided to implement something different, pretty much to incorporate a trading lesson, something that you can learn from, also combined with a trading setup with a trade that I took live this week. So that is kind of a trading breakdown together with a lesson so that you can actually get something out of the video instead of just watching and seeing the trades that I took. So I truly hope you're going to enjoy it. Without further ado, let's get into it. Today, we're gonna cover 3 trades. That is a win and a loss on EURUSD and also a win on GBPUSD. Also, we're gonna pay a lot of attention to imbalance areas, aka fair value gaps, but I do like to call them imbalances because fair value gaps are a little bit of a tongue twister. Now, as I went through all of my trades in 2023, it was a profitable year, but there were a lot of losses. Like my win rate was pretty low, like 40% win rate, 45% win rate. There were a lot of trades that just kind of hit stop loss. And I was like, okay, why? The first thing was liquidity. So intraday liquidity, what liquidity is taken in order to fuel an opposite move. But then the second thing was the higher time frames. I was solely focused on the volatility time frame. And for example, sometimes I have been telling you the volatility time frame will make a trend change. And then I'm going to be like, okay, clear, bearish bias, very nice. And I try to take a short and then the market just does this. And I have seen this situation happen a lot of times. So then since then, I introduced the daily time frame. I started introducing the weekly time frame. And there was one person who suggested in the YouTube commenters. So thank you for that. I'm not sure who exactly the name is, but there was one person who said, you should look at imbalances. I was like, okay, I have been observing those things for quite a while, so let me actually go look into them. I asked for some suggestions, and of course I got ICT, first of all, watched quite some of his videos, very long. A lot of time went into there. Then again, I started popping out some other SMC channels, and I watched mainly Casper SMC, and I also recently discovered Ario. On YouTube, very good content there on imbalance areas, a lot of inspiration I have gotten from him, so credits to all of those people. And again, don't tell me, oh, you have turned into an ICT SMC trader. I hate those terms because again, trading is trading. Is it SMC, is it ICT, is it retail, support and resistance? I think this is just made to polarize people, to make you like think, okay, I'm trading SMC, so I'm better than you, or I'm trading this, so this is that. I don't like this. So again, trading is trading. You have to take concepts, you have to frame your own approach so that it actually makes sense, it resonates with you, and pretty much you get a working strategy. So with that rant out of the way, let's get into the breakdown. Now again, make sure to be watching the weekly outlook and setups because all the context that I share there is pretty much going to be reflected here, or all the things that I share here. Then you can of course see how I can apply those concepts in the weekly outlook and setups. Now, first of all, again, if I actually start from the DXY, there is actually my analysis right here. We had this weekly imbalance. And again, the main topic of this video is like observing imbalances and also starting from the highest time frames of all. Now, again, when you have a monthly imbalance like this, if we tap, it's gonna take a lot of time for the market to reverse. It's gonna take a lot of time for the market to tap into the imbalance. You can see it took a whole month, and right now a second month is incoming in here. And it's probably going to take another month to reject, and then probably on the next month to fall back down. However, as we tapped inside this imbalance area right here, that immediately starts giving us rejections, and that immediately starts making us think that, okay, we might start potentially going down. And that is when, for example, your volatility uptrend could potentially start going down. And in the past, I was like, all right, volatility time frame bullish, looking for a 50% tap and a continuation, without actually being aware of what is happening even on the highest of time frames. So again, starting with this overall narrative that the DXY is in a monthly imbalance. And again, similarly, EURUSD also had one right there. This is another nice monthly imbalance, and we just pinged into it this month. So again, we start seeing some bullish pressure. So this is again going to draw the conclusion of why I took one loss. Now on the weekly time frame, we don't have much to work with. Again, we have a push, we're having an overall pullback. It was pretty slow in January right there. And again, we can see the last week of January very nicely pushed down. And this week we pinged into the imbalance, and you can already see the rejection we're having. So that is pretty good. Now then, of course, transferring onto the daily time frame, the market was chopping, but then we very aggressively started coming into that imbalance right here. And then, of course, after all of this consolidation, we had Thursday news, we have Friday NFP. On NFP, we massively rallied lower. And then Monday, you can see the market just opened. It didn't really make a wick higher and just straight dropped into that imbalance and just pinged it by a pip. So then on the next day, so my trade, the first trade I took was a win on Tuesday. I'm going to show you. But then, of course, already going into Wednesday, in which we had this daily imbalance going lower, which is where I did a mistake to take a short from here. So, of course, we're going to dive deep into the lower time frames right now. But again, as we had this daily imbalance, it was low probability to take this short because, again, we're coming in from a monthly imbalance. That is a lot of support, and you can already see the rejections going higher. Now, dropping onto the hourly time frame, let me first start with the first trade because we were looking at somewhere right there. I'm going to use the replay mode in order to make it a little bit easier. Now here again, you can see on this way down, we had a lot of momentum going bearish. And again, like one of my biggest confusion before about imbalances is like, if we have 3 of them and I'm like, okay, yeah, I don't like this because it's going to retest 3 of them. And then at the end of the day, it's going to come to the supply and demand area right here. Well, cool, but again, it's all about lower time frame confirmations because I always look for lower time frame confirmations on my supply and demand zones. So I do the same right now with those imbalance areas. Here we came into the first one, it was pretty late, came in again, kind of failing to reject, then we pushed a little bit higher. And at that time, it looked like that the market is disrespecting this imbalance, all right? But I know that there is one above as well. And then what I was looking for is by the time this candle hasn't started printing yet, I was looking to see if the market is actually going to form a 4-hour imbalance right here. So then I can potentially say, all right, we're turning bullish. I would potentially then look to go long. But as the market started playing, we can then see we had a very massive rejection lower that prevented a potential bullish imbalance to form. So then, of course, on the hourly time frame, you started seeing the rejection here. There wasn't even an hourly imbalance going higher. And then we started dropping like crazy. Now, again, I missed this whole move, but what I knew at that time is that potentially this low is going to get taken. So then I said, okay, how can I get involved? Well, first of all, I don't want to go to the 5-minute to the 50-minute to go FOMO. So I waited 1 more hour and look what happens. Right here, we have a brand new 1-hourly imbalance right here to suggest that we're still bearish. And also I look at timing, because here like 10 o'clock is London open and there is the London momentum. So I don't want to chase this because I know there is going to be a pullback incoming. So then again, we have here lunch hour. There was like, for example, there were a couple of shorts that could have been taken, but I waited for the high probability one. And there it is. The market comes inside this hourly zone again around lunchtime, just before New York open or after New York open. We usually get like a sharp little quick pullback. That is to grab liquidity. That is to stop out the people that are kind of chasing the market. But that is to also pull back into those hard time frame imbalance areas. Because we had a massive drop, and imbalances are like a very sharp, how like I explain it is like imagine a paintbrush and it just go very fast to paint something, and there are usually gonna be a couple of empty spaces right there. So then you have to go back in to take care of those gaps right there, and then to potentially like get that clear painting. So this is exactly what we're doing right here, coming back in. So what I did in this case is I went to the 5-minute time frame to again look for that shift of order flow, because what I spotted is that a lot of times we talk about momentum, but I always kind of felt momentum was a little bit subjective. Like, what is momentum? Is this momentum? Is that momentum? Yeah, these candles don't look very strong. These ones look very strong, right? So technically momentum is like creating imbalances. And that is pretty nice to see. That is pretty nice to see because it gives a little bit of objectivity to what momentum actually is. So again, here we have bullish momentum. What is bullish momentum? It is pretty much those bullish imbalances being created. So what I want to see is to start seeing some bearish momentum, which is what? Which is bearish imbalances. There you go. We go from bullish to bearish. In terms of structure, once again, the overall 5-minute range is from this low to this high. But again, in the past, I would require, for example, a 1-minute trend change, which of course occurred, 1 minute high, 1 minute low, There is your 1 minute trend change. Of course, you're first going to see, for example, the 1 minute bullish imbalances. There is bearish imbalance tapped in. There are other bearish imbalances being created. So that, of course, first suggests that the 1 minute is shifting, and I could already take a trade from here. But in this case, I waited for the 5 minute, and after this imbalance printed here, there is the next candle. I took it from somewhere right there, had a 6 pip stop loss above the high, so probably my entry was like this. And then remember the target, very clear low right there. That was my trade, and I'm also gonna share my MT4 stats just to kind of throw a little bit of a proof if you need it. I don't think you do, but it is what it is. So I'm not sure if I close it down all the way down there or somewhere right here. You can look at the overall stats, but that was my first trade of the week on EURUSD. And again, very nice that I actually closed out there. I was looking for a very quick and short trade towards that obvious target, because again, as we tapped here, it was Tuesday, and Tuesday usually sets the low of the week. So I potentially knew that, all right, we could start rejecting higher, and you can see then we started consolidating, and overall at the end of the day, we ended up, I do believe we ended up going a little bit higher. Yes. So that is my first trade. Right now, let's have a look at the second one. All right, we're back on the daily time frame. Again, remember that after this Tuesday candle closed, we formed this daily imbalance. But again, at that time, what I reflected later is that, again, the key lesson that I want you to extract is always, you hear everybody telling you this, and I've been telling you this a lot, higher time frames always matter. This is in terms of structure. So if you're having a daily bullish structure, and then the 40 time frame is bearish, then of course the 40 time frame is going to shift because the daily is bullish. And in this case, we had a monthly bullish imbalance, but the daily time frame is coming in bearish. Well, of course, that daily is not going to hold because we're coming in from a monthly zone. So that is what I failed to recognize in the morning, potentially because I took some very good trades just from daily imbalances and then just hourly shifts. Very nice, very stress-free trades. So I immediately went on the hourly time frame. And not, well, not immediately, of course, by the time I came into the charts, let's see. 7 o'clock, one more, no, okay, so it's exactly here because I took that stop loss. So as I came into the charts right there, I started seeing, all right, so we had, again, similar thing that I explained to you. It works on every single time frame. We have bullish imbalances, okay, bullish momentum, taps inside the daily, whoop, all of a sudden we're having a bearish imbalance. Now, this was very, very premature, and I didn't really like this because, again, preferably you would like for it to see a cleaner push lower and to also preferably break structure, because structure still matters. Structure still matters. Here we had a very nice bullish push. We had also a couple of imbalances lower, which is potentially what the market responded from right there. Maybe if you go to the 2-hourly time frame, look at that. There is your imbalance right here that actually caused the market to go higher. So it was not a good trade. So again, full honesty, I went a little bit FOMO on this one, because then I jumped on the 15-minute time frame, and even the market was still within Asian session. And I was like, okay, let's see how this hourly imbalance is going to respond. Am I going to get a 15-minute shift? And then I got this. I got this pushed lower, and it was just 10 minutes before Frankfurt opened. So then I get this 15-minute shift. Also, what I liked is that we had a 15-minute breakup here, and then we had a 15-minute trend change lower right there. So technically, this is the high, this is the low. We had a pullback. We are pushing lower, potentially to break out this low. So I had a very easy target going lower, potentially also the Asian low. And I just wanted to kind of catch a quick scalp and probably secure break even. And then if it goes lower, then I'm just going to take like a 2R and then just run away. Unfortunately, again, the market came in, kind of rejected for a moment right there. And then it just went on and hit stop loss, right? So that is my second trade of the week, right? This absolutely could have avoided, but again, I'm pretty grateful for this loss because it taught me an important lesson that, once again, hard time frames always matter. And if we have tapped into a hard time frame, this goes to every single time frame. If you tap inside a daily zone, the 40 time frame is going to come in bullish. And again, this trade exactly right here is not high probability. Why? Well, because again, we're tapping into a daily zone. It's going to give us a lot of rejection, and it is most likely going to cause a trend change. Then, of course, as you have that 40 trend change, that is your high probability trade. Daily zone, 40 trend change, crazy. Very nice. Now, again, this being my third trade, and I tried to observe a little bit what is going to happening. I tried to also go long, but then again, it was just choppy. And today it is also pretty choppy. So like on the daily time frame, we are potentially creating a daily imbalance going higher, which is again by the end of the day. I really hope that the market does not tap this line, because if it taps this line, that is going to prevent another imbalance from forming. And currently also this morning I was observing this 4-hourly zone, but you can see it's kind of getting very strong inside it. We're still, again, what is the current momentum? It's bearish. 15-minute bearish imbalance, that is a potential short after taking out the Asian high. Here, 15-minute bearish imbalance, that is also potential short, but I don't want to take it. Why? Well, because again, we're tapping into a 4-hourly zone. So that is EURUSD. Right now, let's jump into GU. All right, here we are with GU once again, starting from the monthly time frame, because you want to know where those bigger time frames are going. Now, again, keeping that context in mind that the DXY already tapped into its monthly imbalance bearish, I don't really require for GU to go all the way down as well. Like, I'm fine, and I do believe we're going to continue going higher eventually without going into this monthly zone. So again, with that being said, that's cool. Weekly time frame, nothing to work with. GU was absolutely the most horrendous pair in the last, I don't know, what is this, 8 weeks? So 56 days, absolutely choppy. And just right now, we're starting to get a little bit of momentum. And again, we're having a massive rejection coming from the downside. Why? Well, because again of the DXY. Then on the daily time frame, we have that exact same setup with EU, sorry. But on that day in the morning, I told myself, okay, EU looks more bearish, so I'm going to focus on EU shorts. I'm not going to look at GU because GU looks a little bit more bullish. Why did I think about this? Is because we had 4-hourly imbalances going higher. And again, I look at those imbalances simply as momentum. Where is the momentum going? And also I have some Fanatic members that, for example, already by utilizing our entry models, for example, if we have that 15-minute valid range, we do not want to see the market come with imbalance inside our area that we want to trade from. Why? Well, because that suggests that the market is reversing. It's momentum coming back at us, right? We want to see the imbalances here on the way up and then corrective price action going down. This is what we want to see here. Instead of correctively pulling back to that daily imbalance like EU did. So if I just go to EU real quick, you can see that EU coming into that overall daily imbalance, it was pretty slow and corrective. That's why I thought, okay, looks good for shorts. But then GU was coming in very fast, and I immediately threw away a potential short trade here. We came into that daily zone, kind of rejecting, then slowed down a little bit. And then here, it was all about working with a lower time frame. Because I was observing this on the hourly time frame, how it's going to respond. And again, you can see it pushed up, it pulled back. Actually, on the way up again into that daily zone, we had an hourly bullish imbalance, but then we had it bearish as well. So it kind of gave that little bit of a sign of a rejection. But similar to EU, didn't break structure, didn't really commit lower. And then around 9 o'clock, so what time zone? Is this my time zone? Yeah. So around 9, this is Frankfurt open. We just all of a sudden, whoop, popped up. I was like, oh, right. So this guy is not going lower. And at that time, I already took my loss on EU and I reflected on that monthly time frame. So I was like, okay, GU looks much stronger. Has this 4-hourly momentum going higher. I just waited 1 hour here for that hourly imbalance to form. So similar to the trade that I took on EU, which was also with an hourly imbalance. And then what I just simply did is I went to the 5-minute time frame to be looking for something. But the 5-minute time frame at that time was looking a little bit shitty, came in, bullish candle. So then I went to observe it on the 1-minute time frame. And what I simply waited for is for our usual entry model, 1-minute trend change right there. And how did this one happen? Happened with very nice imbalance here, very nice imbalance there. Then the market came in very aggressively. I didn't like this. So what I waited is for another structure break right here. And that structure break also happened with a very nice imbalance. Then the market came back down without creating any. So I do believe I executed my trade somewhere from here. And I placed my stop loss there. I think I had around 4.5 pip stop loss. Where was my target? The high right there. But again, I think I chased it to 2.10. Now, again, you're going to see my MT4 stats. I'm going to share them. I took this trade with half risk. Why? Well, because at that time, again, I still didn't really fully reflect on the monthly zone and that we're going higher. And at that time, GU was still, come on, where we are. Oh man, GU was still within that daily zone. And I thought, okay, we're still tapping inside that daily zone here. We could very, very easily right now just make a massive rejection and start going lower. So again, we were quite above it already. But I thought, okay, if I take a trade here, imagine that it just starts rejecting massively right now. It was also above the Asian high. It had pushed for quite a lot. So I didn't really trust this trade. So I took it with half risk. So again, this 2R, half risk, covered my loss on EU. So I ended the day at break even. Then on the previous day, I have 2%. So pretty much profitable so far this week. And again, this morning, we are just chopping around. Now again, why 2R? Well, why 5R? If I ask you this, right, a lot of your trades, I want you to have a look at your trades and see what is your average risk to reward. A lot of traders try to go for 10R, for 5R, for a big R like this, while the way that I believe going forward for me to actually make money and to actually, because my equity curve really looks like this, pop up, chop, 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 right? Pop up, chop, 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 chop. I don't want to have this. Why do I have this? Is because I'm taking a lot of low probability trades. I'm looking for 5R trades and I'm potentially micromanaging the trades. Why? Well, because I'm in a losing streak. I used to have very short winning streaks and then very big losing streaks. Then of course I'm gonna get 2 winners that are gonna bring me to equity highs. But then again, I enter into another period like this. I don't like this and it's very bad on my psychology. So what I prefer to have is just smaller wins. Small win, maybe loss, small win, maybe loss, small win, maybe loss. And that is how your equity curve should potentially look like, all right? So this is where I want to end it. Those are my 3 trades so far. It's Thursday. Definitely tomorrow I'm going to look for another trade. Let me know if you enjoyed this quick lesson. Also touching a little bit on imbalances and how I'm currently viewing them. Let me know if you have any questions, any feedback, anything else you want to see. I wish you a lovely week, a lovely rest of your trading week, lovely weekend, and see you on Saturday's weekly Outlook and Setups.